Many people believe that doing their own taxes is the smart move. In reality, for anyone earning serious income, it is often the most expensive mistake they make every single year. If your income has grown but your strategy hasn't, this video is for you. DIY tax software has become the default for millions of Americans because it feels simple, affordable, and familiar. These platforms are designed to make filing look fast, painless, and easy. And for people with basic financial lives, that can actually be true. When you have only a W-2, no investments, no business income, there usually isn't much to optimize. The problem is that most people keep using these same tools long after their finances become more complex. As income increases, tax complexity increases right along with it. Every new income stream introduces layers of tax strategy that DIY software is simply not built to handle. These platforms are designed to help you report what already happened, not to help you shape better outcomes going forward. If you don't know which strategies exist, the software will never tell you what you're missing. It will never optimize your strategy. This is where high-income earners get into serious trouble. DIY software is reactive by design. It only works with historical information. For someone building real wealth, the gap between compliance and strategy can easily translate into tens or hundreds of thousands of dollars over time. Let me show you exactly how this plays out. Marcus runs a digital marketing agency and earns $175,000 a year in profit. He did everything right on the surface, set up an LLC, reported all income, filed on time, no red flags. Because Marcus stayed a regular single-member LLC, every dollar of his $175,000 was subject to self-employment tax. That's roughly $26,775. If Marcus had elected S-Corp status, the math would have looked completely different. An S-Corp allows him to pay himself in two ways: a reasonable salary and distributions. If Marcus paid himself a salary of $90,000, only that portion would be subject to payroll taxes. That one structural change would have saved Marcus over $13,000 in self-employment taxes in a single year, year after year. Most people think the cost of doing their own taxes is the software fee. In reality, that fee is insignificant compared to the hidden cost of missed opportunities. Overpaying taxes rarely comes from obvious mistakes. It comes from not knowing what questions to ask, not knowing what options even exist. High-income earners often assume that because they filed correctly, they filed optimally. Those two things are not the same. You can be fully compliant with the IRS and still massively overpay. The accumulated overpayment can total into 7 figures over a career. DIY tools will never warn you that your structure is inefficient. They file the return, move on, and leave you with a false sense of security. At some point, many people realize DIY taxes aren't cutting it and they hire a CPA. That's a real step in the right direction. A CPA brings expertise, accuracy, and professionalism. Returns are correct, deadlines are met, and IRS issues are avoided. But most CPAs are also primarily focused on compliance, not strategy. They are managing hundreds of clients and spending time preparing returns as efficiently as possible. Because most communication happens during filing season, when the year is already over, it's too late to change most outcomes. By the time your CPA is working on your return, every financial decision that could have reduced your tax bill should have already been made. Here's the distinction that changes everything. Tax filing looks backward. It documents what already happened. Tax strategy looks forward. It determines how income is earned and how assets are structured, all before the year ends. Real tax savings are created during the year, not in April. Strategy turns taxes from a surprise expense into a planned, controlled outcome. A high-quality tax strategist approaches taxes as part of a long-term wealth plan. They focus on building systems that reduce taxes as income grows. This is how high-income earners and truly wealthy individuals think about taxes. They don't ask how to file cheaper, they ask, how do I legally reduce my lifetime tax burden? At Prosperium Tax and Advisory, we help high-income earners and business owners implement advanced strategies that dramatically reduce their overall tax burden. The hard truth is, if you're making good money and relying on DIY software, you're playing a small game with big income that almost always benefits the IRS more than it benefits you. If you want to know what opportunities you've been leaving on the table, book a strategy call with our team through the link below. Let's look at your numbers together.